Even with some houses losing $900,000 in value off their 2022 prices, it seems like there may be another supply crunch, not just in the condo market, but in the housing market in general. And with many Gen Zers and millennials committed to buying homes and lower interest rates coming right around the corner, we could in fact find ourselves in a situation in the next little while where housing prices in Canada continue to get worse. But before we get into all the details, my name is Nolan Matthias, and if you want the latest Canadian real estate and financial news, this is the place for you. So do me a favor, hit the subscribe button and hit the like button so more people like you can see this video. And don't forget, if you are potentially in the market for a new home or a mortgage in the next little while, you can get my book, Mortgage Secrets, totally for free by going to mortgagesecrets.ca. All you have to do is pay the shipping and handling. And by the way, it's got all the secrets, all the real ways to negotiate with a broker, negotiate with a bank, and get the absolute best deal without getting screwed. So make sure you check that out. Okay, so let's get into it. I'm going to go back to the old format here, new studio, old format, and we're going to jump right into the news and talk about what's going on in the Canadian real estate market. So I want to start by showing you this image from Edge Analytics. This is an image that shows the single family building permits in Canada. And I'm going to tell you right now that single family homes, the ones that are most desirable, the ones that most people want to live in right now, well, they aren't really becoming available in the same way that they used to. And at the same time, believe it or not, we're going to see some issues in the condo market, which I'll get to in a second. But really what we had during the pandemic is we had this significant shift from people wanting to live in condos and downtown and be near the action to wanting to be in single family homes. And now with all of the push to increase housing due to immigration, what we're seeing is housing getting built that nobody really wants. And the fact that nobody wants it, the condos, that's going to actually create some issues getting condos built in the near future as well. And I'll show you that right now. So if you take a look at this article from CTV, with condos not selling, Canada faces worsening home ownership crisis. Well, what this article is talking about is the fact that as of right now, builders who are trying to build properties are not able to get the pre-sales they need in order to get the financing to build those condominium complexes. So how this typically works is that when a bank finances a condo project, they require that the builder sell a certain percentage doing pre-sales prior to actually giving them the funding to build the property. And what we're seeing right now is even though there's a big push to build housing in Canada, there isn't a lot of people that want to buy the type of housing, that is being built. And that is actually leading to many of these projects that are deemed to be needed in order to house the number of people that are expected to be in Canada to actually not get built. So this combined with lack of single family homes and what we're seeing right now in the Canadian real estate market is a significant issue that could cause upward pressure on pricing. Now, add to that, a recent survey from Scotiabank says that 58% of Canadian Gen Z and millennials are still determined to buy homes despite the affordability issues. So what we're seeing this issue where single family home permits are down. This is the type of property where most people in Canada now want to live. We're seeing condos that can't get built because nobody wants to live in them. And now we're seeing 58% of Canadian Gen Z and millennials still wanting to buy a home. And there's good reason for this. It's because there is a significant gap between those who buy a home and those who don't, especially at retirement, because Stats Canada just released their most recent statistics with respect to net worth. And there's a huge wealth gap between Canadian homeowners and renters. You aren't going to believe these numbers. According to Stats Canada, that families with main income earner closer to retirement between 55 and 64 who both owned their home and had an employee-sponsored pension plan fared much better off than other Canadians. This group held a median net worth of $1.4 million in 2023. Now, conversely, Canadians who were renters and did not have an employee-sponsored pension plan had a significantly lower median net worth of $11,900. So just the home ownership piece of this is actually the majority of it, because they go on to say StatsCan and said families with only one of these assets formed a net worth intermediate group with net worth of $359,000 for pension holders without homes and $914,000 for homeowners without pensions. So to make this a little bit simpler, basically what this is saying is that if you didn't have a home, you were likely to have a net worth between $11,000 and $359,000, depending on whether or not you had a pension. But if you owned a home, you have a net worth somewhere between $914,000 and $1.4 million. So it's clear that owning a home is what is the most easy path to building wealth and having a significant net worth. Now, all of that being said, we're seeing the headwinds, the decreased interest rates. We are seeing the lack of supply, lack of building permits, and we are seeing this urging of millennials and Gen Zers to get into the market. But at the same time, in Ontario, for example, we're seeing homes sell for $500,000 losses compared to their 2022 values. And on one mega mansion here, I'm going to call this a mega mansion, we see a $900,000 loss as market remains stuck. Basically, this home sold for about $900,000 less than what it had been bought for in January 2022. It was bought for $6.8 million and sold for $5.9 million. Now, this is an outlier. It's a very expensive property, but at the end of the day, here's the reality of the situation. The reality of the situation is there are certain markets where it is still scary to buy. I mean, Toronto condo market right now, scary to buy. Any sort of condo market right now, scary to buy. You've got Vancouver with certain housing prices potentially coming down. And you've also got a lot of the country that has very reasonable prices, very reasonable markets. And what it comes down to is, what is your long term plan? What is going to be the use of the property for the next 5, 10, 15 years? If property values come down, can you sustain it? And really, what it comes down to when you're buying a home is it the right time for you? Nothing else matters, not the ups in the markets, not the downs in the markets. But right now, I can tell you with complete certainty, nobody knows where this Canadian market is going to go. So all you can do is make the best decision for you, which means choosing to buy a home if you're growing a family, if you're going to stay in the same place for a long period of time, and making sure that when you buy it, you can with complete certainty afford it, even if the worst were to happen. So that is what's going on in Canadian real estate for October of 2024. By the way, if you want to see what's going on with interest rates, because it's getting really interesting out there, make sure you check out this video right here.